Chief Compliance Officer Scarborough of Quadstripe Corporation announced, "Without admitting or denying the allegations, our company consented to the entry of a permanent injunction against Foreign Corrupt Practices Act violations, and we settled with the Securities and Exchange Commission with an agreement to pay over $1.2 million in disgorgement and over $100,000 in prejudgment interest. Quadstripe may also face over $1 million in criminal fines in a related case with the U.S. Department of Justice." It was the salespeople of Third Line, our subsidiary, who made those payments. We didn't know they were bribing foreign officials. Any company that fails to respond to red flags can be held liable for the acts of their partners and affiliates. Quadstripe Corporation did not have adequate measures in place to detect and root out internal wrongdoing. The act of a few guys will make everyone at Quadstripe look bad and will make a terrible negative impact on all of us at Quadstripe. The Securities and Exchange Commission alleged the salespeople of the Quadstripe subsidiary Third Line obtained cash advances from their accounting department and used the cash to bribe government officials in an effort to obtain or retain business. The company also violated the Foreign Corrupt Practices Act accounting and record-keeping requirements when they reported the cash payments as business fees and travel expenses. But the payments made to the government officials were customary business practices. The payments were gifts for third-party agents. Bribery, kickbacks, payoff gifts, influence peddling. No matter what you call it, if the payments were made in the effort to influence the acts or decisions of foreign officials to obtain or retain business, then the payments are considered a violation of the Foreign Corrupt Practices Act. But the salespeople of Third Line were making illicit payments well before Quadstripe Corporation acquired them. Quadstripe's failure to act on the significant indications meant we allowed the bribery to continue at Third Line. Quadstripe failed to effectively investigate the red flags to stop the bribery from continuing. We should have conducted proper due diligence to identify the risks and implement meaningful changes to the sales process. But the payments were not made in the United States and didn't involve U.S. employees, so how could a U.S. law cover business transactions overseas? While the illicit payments were made exclusively in China and were conducted by Chinese employees, Quadstripe is incorporated and headquartered in the United States, and therefore any Quadstripe employee, partner, affiliate, or contractor conducting business in any country is covered by the United States Foreign Corrupt Practices Act. All Quadstripe employees, including the Third Line employees in China, took a mandatory compliance course about anti-bribery practices. Doesn't that demonstrate the company tried to prevent corruption? Even though Quadstripe provided compliance training, our subsidiary did not impose sufficient internal controls and failed to maintain accurate record-keeping. Although Quadstripe properly communicated instructions to all personnel, the company did not prevent improper payments made through their subsidiary, and therefore Quadstripe was in violation of the Foreign Corrupt Practices Act. Professionals of our firm are trusted advisors to our clients, and our firm's client-first focus is rooted in an unwavering commitment to excellence and integrity. The guidelines of the United States Foreign Corrupt Practices Act outlined in this video are designed to ensure all employees and business partners act in accordance with laws and regulations and apply the spirit of our values in every way we conduct business. As an employee of our firm, you are covered by the FCPA, and our firm is required to enforce adequate internal controls to prevent bribery. Simply put, bribery is offering or giving, soliciting or accepting an advantage as an inducement for an illegal action or a breach of trust. The anti-bribery provision of the FCPA prohibits any payment, offer, promise, or authorization to pay anything of value to a foreign government official if it is intended to influence obtaining business. Anything of value is considered cash, as well as gifts, meals, entertainment, travel expenses, campaign contributions, charitable donations, office equipment, medical supplies, personal favors, or any other creative way to make a bribe. The FCPA also prohibits indirect payments made while knowing or having the willful blindness that the payment is used to bribe a foreign government official. In addition to the anti-bribery provision, the FCPA has the accounting and record-keeping provision, which requires companies to file periodic reports with the SEC and keep records which accurately reflect business transactions. Our firm maintains a system of internal controls to prevent unauthorized transactions and unlawful methodology. Our recorded accountability for assets is compared with existing assets at reasonable intervals, and immediate action is taken with respect to any differences. Our firm conducts periodic audits, including the audits of third parties, to confirm compliance with the laws. Always record your business transactions completely and accurately. The Securities and Exchange Commission and the Department of Justice are jointly responsible to enforce the FCPA. The SEC brings civil enforcement actions against issuers, officers, directors, employees, and agents. The DOJ also has civil anti-bribery enforcement authority and criminally prosecutes domestic concerns as well as foreign persons and entities acting within the United States. Our firm may be held liable for failing to prevent illegal activity, regardless of our awareness of such behavior. If our firm is found in violation of the FCPA, we are subject to both criminal and civil actions, which may result in fines, suspension, exclusion from government procurement contracts, and severe damage to our reputation. If you are found guilty of FCPA violations, you may be subject to fines and prison sentences. Individuals also are subject to significant civil penalties and disgorgement, plus prejudgment interest. Full compliance with anti-bribery laws is critical to the success of our firm and everyone within our organization. In addition to being illegal, corruption is also prohibited by our firm's policy, which applies to all employees, subsidiaries, directors, officers, consultants, advisors, and agents, regardless of location or nationality. Anyone who violates our firm's policy is subject to discipline, including dismissal. Our firm's policy expects you to deal impartially and to continue to demonstrate high ethical standards in everything you do. Any suspicion of unethical behavior can lead to an investigation, which may have a devastating effect on our firm. In addition to taking a significant financial toll, such investigations erode our reputation and diminish our clients' trust in you and our firm. Avoid the appearance of impropriety by never accepting or offering anything which may be seen as an attempt to influence. Gifts, hospitality, and expenses are part of building client relationships, and in some societies, they're expected by clients. You must know where to draw the line between what is appropriate and what is an unreasonable expenditure made to influence. Our firm closely monitors payments and allows only transparent, documented, proportionate, reasonable, and bona fide expenditures. If doing business requires certain paperwork or action, then it is considered a routine governmental action or a facilitation payment, and it falls under the exception to making payments to a foreign government official. Facilitation payments must be constricted to internal controls and in compliance to ensure the act does not influence a foreign official. Sometimes it may be confusing whether an expedite fee or a payment for the cost of a routine government action is appropriate. Therefore, if you have any doubt or concern about a procedure or transaction, then identify the red flags and immediately contact your supervisor or our legal department. Research those you conduct business with. Don't risk tarnishing your own reputation or our firm's by associating or doing business with anyone who has a reputation of unethical dealings. Make sure all third-party associates are aware of and commit to comply with our firm's policies. Specifically, ensure anti-bribery compliance clauses are included in all contracts and agreements. We cannot anticipate every circumstance, and in some situations, it is difficult to determine if there is a potential violation. If you're ever asked or expected to make or receive a payment, it is imperative that you refuse to do so. Protect our firm and yourself by seeking guidance before you act. Clearly explain to everyone involved how our company policy prohibits corruption. To preserve our firm's reputation of excellence and integrity, each and every employee must make prompt and consistent action against potential violations.